Are you about to file your 2024 personal income tax return? You don't want to miss this video podcast because I'm going to go over 6 of the most overlooked tax deductions you don't want to miss. That could be the difference between a tax bill or a tax refund. So you want to stick around to the very end so you make sure you take all 6 of these deductions. Welcome to the Locum CPA podcast. My name is Stephen Lee, a CPA based out of Chicago, Illinois, specializing in locum medical professionals. In today's video, I'll be going over 6 of the most overlooked tax deductions that you still are able to take before you hit submit of your 2024 income tax return. First one is charitable contributions. Once again, the first most overlooked tax deduction is charitable contributions. One of the easiest ways to really reduce your taxable income, especially if you're itemizing, is through charitable donations. Whether you've donated things like clothing, furniture, or even monetary gifts, you want to make sure you have receipts or confirmation letters of your monetary donations, as well as non-cash donations given during 2024. Remember, even the smallest donations given can make a difference. And remember, generosity doesn't just help others, it also helps your tax situation. So remember a few things here. Keep digital or paper receipts of those donations and confirmation letters of monetary gifts. Don't forget that mileage for your car used for volunteer activities is also a tax deduction. And make sure to check the IRS guidelines for qualifying charities because the donations need to have been made to a registered 501c3 charitable organization. And the 501c3 designation is a special designation with the IRS. So make sure that whoever and whichever organization that you did donate to is a qualified 501c3. Number 2 is the state and local tax deduction, also known as SALT. The state and local tax deduction or SALT deduction is another one not to overlook. Depending on where you live, you can deduct up to $10,000 of combined state income tax or sales tax plus property taxes. Make sure you understand that the current SALT limitations is in place, and that's up to $10,000. And remember to keep track of things like your property tax bills, as well as consider whether the sales tax that you've paid is higher or the state income tax. Whichever the two is higher, make sure to take that one. The third tax deduction you don't want to miss is the mortgage interest deduction. So if you're a homeowner with a mortgage, the interest that you pay every single month could add up to be a significant tax deduction. Your lender should provide something called a Form 1098, and that outlines both how much interest you paid over the previous calendar year in 2024, as well as sometimes the property taxes listed on there as well. Because many of us, when we pay our mortgage, property tax is also collected and escrowed or held on your behalf and then submitted. Here in Illinois, it's about twice a year. So make sure you receive that Form 1098 and make sure that you're claiming the deduction for interest paid and the correct amount because it needs to match up to that 1098. And remember that the Form 1098 not only reveals the mortgage interest paid, but also the property taxes that you paid as well sometimes. And remember, the mortgage interest deduction is capped. Okay, so you want to make sure that you're not deducting all of it. Remember, make sure it's capped. And that really depends on how much principal that you have loaned out, as well as the origination date of that mortgage. So you want to check those two to make sure you're not over the cap, because that, I will tell you, is an IRS red flag if you're over that cap. Number 4 is medical expenses. Medical costs during 2024, you want to make sure that if you had a tough year health-wise, make sure you gather all the receipts and consult with IRS guidelines that you are claiming things like surgeries, hospital stays, prescription drugs, and even dental treatments. Remember, the medical expense deduction is your out-of-pocket, not stuff that's covered by insurance, but your out-of-pocket expenses. So make sure that if 2024 was a rough year health-wise, you want to add those up because it may make a big difference for you. Remember to keep eligible itemized bills and medical expenses, whether a digital copy or a paper copy, right? And then also remember that the travel to your medical appointments can also qualify as a qualified deduction as well. So you don't want to forget the travel to and from. Number 5 are health savings accounts. I've talked about this in the past, HSA contributions. Remember, HSA health savings account, only people with high deductible plans, insurance plans, are eligible to contribute to an HSA or a health savings account. Contributions to your HSA are generally tax deductible, and withdrawals for qualified medical expenses are tax-free. It's almost like a health IRA. Think of it that way. So make sure you check your contribution limits. And I'm going to go over those real quick for you. For 2024, the annual contribution limits on deductions to an HSA for individuals, okay, that's yourself only, is $4,150. For families, it's $8,300, so just double the individual. And there's an additional contribution of $1,000 for taxpayers who are of age 55 or older, okay? So make sure not only are you an individual or family, what is your marital status, as well as what is your age. If you're 55 or older, you can add another additional $1,000 to your contribution limit. Remember, the contribution deadline to an HSA is the tax filing deadline. Whether it's April 15th or October 15th, you still have time. So just think about it. If you are a family and you are qualified to make an HSA contribution because you are a part of a high deductible plan, you can contribute up to $8,300. That's going to immediately reduce your taxable income by $8,300. This is a great savings vehicle. Number 6, IRA contributions. This is a great way and a very fast way to reduce your taxable income. You want to make sure that you're checking the IRS rules because there's income limitations on if you're eligible for a tax-deductible IRA contribution, as well as if you're covered by an employer retirement plan or your spouse's. You want to make sure that you can't double dip, basically. So you want to make sure you're checking the IRS income limits, as well as are you covered or is your spouse covered by a retirement plan at work. Remember, for 2024, the IRA contribution limit is $7,000 for those under the age of 50 and $8,000 for those that are 50 or older. And these limits remain the same for 2025. So remember, it's $7,000 for under 50 and $8,000 for 50 years and older. Okay. Remember, Roth IRAs, this is another question that I get all the time is, should I do a traditional IRA or a Roth IRA? Remember, Roth IRAs, if the goal is to save on taxes in the current year, Roth IRA is not your option. You want to go traditional if you're qualified, okay? Remember, Roth IRA is using after-tax dollars, and you can pull it out tax-free, but you don't get the savings in the current year with a Roth IRA. All right, so remember, these 6 last-minute deductions, you want to make sure you go through the list to see not only are you eligible, and can you make those contributions or deductions? Okay, so you want to make sure you're covering all 6 of these. If you found this video podcast helpful, remember to hit that thumbs up as well as hit subscribe so you don't miss out on any great content over the next few weeks and the rest of 2025. Thank you again for listening, and I'll see you next time. Bye.